There's a moment every trader can instantly recognize. You step into a trade full of belief. Your analysis feels solid, your levels look precise. Your risk is calculated, everything's set perfectly. Price moves in your favor, and green starts lighting up your chart. Suddenly your pulse quickens, profits are showing. It's not a fortune, but enough for your mind to whisper, "Take it now, before it fades." You hover over the close button, knowing your plan aimed higher. But emotions roar louder than logic, and before you know it, you've exited early. Regret floods in as the chart hits your original target, without you. This is one of trading's most common mental traps, not holding your trades. It seems harmless because taking profit feels like victory. But in truth, it reveals doubt in your plan, lack of discipline, and an urge to feel safe in the moment instead of being patient for the outcome. Do this over and over, and it quietly destroys your progress. Why is it so hard to simply hold on? It's not strategy, it's mindset. The market has a unique way of exposing your inner weaknesses. When you close early, you're not reacting to the chart, you're reacting to fear. Fear of losing unrealized profits, fear of being wrong, fear that green might turn red. These fears are powerful, rooted deep in human instinct. From childhood, we're taught to hold tight to what's ours. We've all heard, "A bird in hand is worth two in the bush." In trading, that instinct becomes even stronger when money is involved. But here's the twist. Holding trades is what separates pros from beginners. Amateurs chase small wins and cash out too soon. They grab pennies when they could have earned dollars. Professionals, however, play the game for consistency, not excitement. They know following the plan grows equity in the long run. One early exit might seem harmless, but repeat it for weeks, and it wrecks your entire system. Think about it, you risk 20 pips to make 70, but you keep taking 10 out of fear the market might turn. On paper, your system wins. In reality, your mindset loses. The strategy didn't fail, you did. That's why traders often blame their tools, brokers, or even the market, when the real battle is inside their own mind. Closing early is just emotional weakness wearing logic's mask. Each time you cut profits short and feel relieved, your brain rewards you like you've done something smart. But then regret hits when price reaches the target you planned. Your emotions turn into a cycle of highs and lows that never ends. You train yourself to choose comfort over discipline. Over time, this becomes automatic. Your hand acts before your mind can stop it. It's an addiction, the craving for quick satisfaction. This addiction blinds you to the bigger picture. You start trading for safety, not success. Let's be honest, the reason you can't hold isn't the market, it's self-doubt. You don't trust your analysis, your plan, or your risk control. And most of all, you don't trust yourself to sit through discomfort. Because holding a trade means being uncomfortable. Watching profits swing up and down, seeing pullbacks close to your entry, and waiting patiently for confirmation that could take hours or even days. If you can't endure that, you'll always close early. Imagine two traders entering the same setup. Same analysis, same entry, same stop, same target. Trader A panics at the first hint of green and exits with crumbs. Trader B stays calm through the noise, trusting the plan. He feels the same fear, the same temptation, but resists it. The trade finally reaches its target. Trader A feels regret, while Trader B feels satisfaction. Spread this across 100 trades, and the gap becomes enormous. One trader experiences steady growth, the other's account stays flat or declines. That's the real strength of holding your trades. It's less about being right and more about proper execution. Because truly, anyone can place a trade. Clicking that button is the easy part. But keeping the trade open, that's the real test of skill. That's where discipline is built and traders are made or broken. That's why when you study professional traders, you'll see they don't obsess over entries like retail traders do. They understand the real edge isn't in timing the entry perfectly, but in staying with the trade until it naturally completes. Retail traders chase perfect entries. while professionals focus on managing their emotions once inside the trade. Ask yourself, how often have you exited too soon, only to watch it hit your target afterward? How many times have you cut your own profits short, just because you couldn't handle the discomfort? How often did your strategy succeed, but you failed to follow it through? This is the harsh truth every trader must accept. The market doesn't defeat you. You defeat yourself. And here's the biggest irony. The very feeling you try to avoid, discomfort, is actually the key to your success. If you can't accept discomfort and train yourself to endure emotional swings and silence the voice telling you to exit, you'll completely transform your trading. Not because your strategy changes, but because your mindset evolves. Holding trades is a sign of maturity. It's about building the emotional strength to stay the course. It's not glamorous. It's not exciting. It's slow, quiet, and often dull. It's sitting on your hands while your mind screams for action. But that calm discipline creates exceptional results. The ability to stay in when others are quitting is what separates champions from the rest. You must first conquer yourself, and realizing that exiting early isn't protection, it's sabotage. Each time you exit too soon, you teach your mind that fear is in charge. But every time you stick to your plan, you remind it that discipline is stronger. With time, one of these habits shapes who you become. Which one it is, fear or discipline, depends on your choices in tough moments. So the next time you see profits flashing and feel that urge to close, pause. Ask yourself, is this part of the plan or just fear talking? If it's fear, then you already know what you need to do. Because real growth in trading happens only when you act despite the discomfort. And here, the hard thing is the right thing, holding till the plan says otherwise. That's where real discipline begins. That's when you stop being just a trader and start mastering the craft. The market acts like a mirror, and what it reflects most clearly is your impatience. You might not notice it right away, but impatience sneaks in quietly like a thief. It doesn't shout, it whispers in your thoughts. It begins with small doubts like, this is taking too long, or what if it turns? Then it shows up in your body, your shoulders tighten, your breathing shortens. Your hand hovers over the mouse, ready to escape. Before long, your focus shifts from the chart to your feelings, and those feelings push you to act too soon. You close the trade, not because your plan told you to, but because you couldn't bear the waiting. The truth is, holding isn't hard because of the market. It's hard because of time. Time puts the most pressure on traders. The market may move your way, but if it doesn't move fast enough, your patience starts to fade. That's the silent enemy, not the chart, but your own clock. It's not about being right in your analysis. It's about lasting longer than your doubts. Picture two traders watching the same setup. The analysis is solid, stop loss is safe, target is realistic. After a while, one grows impatient. He wonders why it hasn't moved yet, inventing reasons to exit. He imagines news, lost opportunities, and locked up capital. Eventually, he gives in and exits for almost nothing. An hour later, price hits the full target. Meanwhile, the second trader stayed calm, trusted his plan, and waited. One got relief. The other got results. That's the heart of trading psychology. Most traders don't fail because of bad setups. They fail because they can't wait. They don't lose to the market, they lose to time. Because they want the market to move on their schedule, not its own. The market doesn't bend to your timetable. It won't move quicker just because you're trading. It moves on its own terms, at its own rhythm. Your task isn't to manage time, it's to survive it. The tricky part is that impatience often wears the mask of logic. You tell yourself there's a reason to close early. The market looks weak, it's pausing. Maybe I should secure this gain. But often those thoughts aren't real insights. They're excuses your mind invents to escape the tension of waiting. It's like sitting through a long flight. You know the plane will land, yet every minute feels endless. You can't make it go faster. You can only endure the ride. Holding trades works the same way. The goal is clear, but the process shakes your patience. And the market is built to test you. It almost never travels in a straight path. It dips, pauses, fakes a move, and toys with your emotions. It's like the market whispering, "How much do you really want this?" Most traders reply by exiting too soon. A rare few stay patient, and they're the ones who win over time. Think back to the trades you closed early. Did you close because your setup failed, or because you couldn't stay still? For most traders, it's the second reason. Impatience steals more than profits. It also steals your chance to build discipline. Every time you give in to impatience, you strengthen the habit. You train yourself to run when pressure builds. Soon, your trading becomes less about strategy and more about comfort. That's why many traders feel stuck even with good systems. They're not failing from lack of knowledge, but from lack of patience. Their edge exists, but their patience doesn't. They build 1:3 risk-reward plans, then cash out too early from exhaustion. Their edge never gets a real chance to work. When they review results, they blame the system, not their impatience. The irony is that patience feels like doing nothing, but it's everything. It's the unseen skill that separates consistent winners from the rest. Anyone can hit buy or sell, set a stop or a target. But not everyone can sit calmly as hours pass and price plays tricks. Patience feels still, but it's actually a powerful discipline. Each second you hold, you're fighting your own urge to interfere. If your system truly gives you an edge, your role isn't to interfere with it. Your only task is to let that advantage unfold naturally. That means you hold your trades until your plan clearly tells you to exit. It doesn't mean holding blindly. It means holding with discipline. There's a big gap between blind hope and calm patience. Hope keeps you stuck in a losing trade that already broke your rules. Patience keeps you in a valid setup that just needs more time to bloom. One destroys your account, the other strengthens your discipline. But let's be honest, patience doesn't come naturally. We're wired to take action, to do something. When we feel uneasy, we distract ourselves to escape the tension. It's why scrolling your phone feels easier than sitting still. And it's why grabbing a small profit feels safer than waiting for the big one. Doing something feels comforting, even when it ruins your results. But trading punishes that instinct and rewards those who resist it. Here's the harsh truth. If you can't hold trades, you'll never reach your full potential. You might earn here and there, but you won't grow as a trader. Just 1 or 2 strong trades can make your whole month. But if you never let them happen, you'll always chase scraps. And scraps never build real accounts. So, how do you deal with impatience? You don't defeat it by ignoring it. You overcome it by training through it. The discomfort of waiting never disappears completely. Even expert traders still feel it. They've just learned not to obey it. They feel the impatience and still stay in the trade. They've built the muscle of discipline strong enough to resist. And like any muscle, it grows only when tested. Each time you stay through discomfort, it gets easier next time. Each time you quit early, it becomes harder. See patience as your entry ticket into professional trading. Without it, you're just another retail trader chasing small gains and big regrets. But with patience, you give your system the time it deserves to win. Stop reacting to your emotions and start trading with control. Once you master that mindset, everything begins to shift. You can't destroy it completely, but you can take control of it. Train yourself to stay calm in discomfort instead of reacting to it. Remind yourself that every second you stick to your plan is a win, no matter the result. Because the true victory lies in execution, not in the result. Execution means following your strategy, not your emotions. So next time the clock feels slow while you're in a trade, remember this: impatience is the challenge. The market doesn't just test your analysis, it tests your patience too. And if you can survive that test, the stillness, the boredom, the ups and downs, you'll reach a level of discipline few achieve. That's the moment you stop being just a trader and start becoming a professional. Trading is often seen as a game of charts, indicators, and strategies. But when you strip away the candles and numbers, the truth emerges. Trading is about time. Not time in seconds or minutes, but in patience, endurance, and persistence. The ultimate lesson every trader must learn is this: your true advantage is endurance. Your strength lies in staying the course when your emotions urge you to quit. Think about the traders who truly succeed. They don't win because they discovered a secret indicator. They win because they mastered waiting. They wait for the setup. They wait for the trade to unfold. And most importantly, they wait for their edge to prove itself over time, not in a trade or two. That's the long game, and most fail because they can't play it. The market is built to shake your confidence. Every spike, every dip, it's all a test. Do you truly trust your plan, or are you just chasing quick profits? If your belief wavers, you'll fold, you'll take profits too early, cut winners short, and ruin good trades. And in the end, you'll realize it wasn't the market that failed, it was you. That realization stings, but it's also where real growth begins. Playing the long game demands a new perspective. Most traders act as if each trade defines their worth. They treat losses like personal defeat and wins like proof of success. But the truth is, no single trade truly matters. What really matters is the consistency of hundreds executed with discipline. Once you grasp that, you stop caring whether this one wins or loses. You start thinking like the house in a casino. Every spin is random, but the house always wins over time. You must become that house, patient, consistent, and unshaken. Of course, that's easier said than done. Humans are wired for instant gratification. Our brains chase reward and avoid pain. That's why holding a trade feels like torture. It goes against human nature. When you're in profit, your brain screams to take it before it vanishes. When you're in a loss, it begs you to exit before the pain deepens. These instincts once kept us safe, but in trading, they destroy us. To win the long game, you must replace instinct with structure and discipline. But discipline isn't just willpower, because willpower fades. If you rely only on willpower, pressure will eventually break you. Discipline must be built into your system, not summoned in the moment. That means setting stop losses so decisions aren't emotional. It means defining targets so you don't snatch profits too soon. It means planning when your mind is calm, not when chaos hits. Discipline isn't something you summon, it's something you design to protect yourself. The long game also tests your emotional endurance. You will lose, you will doubt, and you will feel pain. That's part of the journey. These aren't failures, they're the price of success. Most quit because they mistake setbacks for signs to stop. But setbacks are the process. Every pro has faced them and moved forward. They didn't chase revenge trades or abandon their system after a bad week. They didn't let short-term pain blind them from long-term progress. They endured, and because they endured, they reached places others never could. Endurance demands something far deeper than simple technical know-how. It calls for belief in your edge, in your skill, and in the power of patience. Without belief, the first test from the market will break you. But with belief, you can stand firm through storms that crush others. Yet, belief doesn't come from empty inspiration or hype. It's born from proof, from seeing your edge work repeatedly. Not perfectly, but reliably enough to know it's real. Each journal note, each backtest, every trade review adds another stone to the foundation of your belief. When that foundation is strong, you can lean on it when emotion shakes you. Another truth about playing the long game is humility. You're not smarter than the market. You can't outsmart or control it. Your purpose isn't to be right, it's to manage risk and follow process. Ego has no room in the long game. The moment you think you've conquered the market, it humbles you fast. The traders who endure aren't the loudest or most boastful. They're the ones who treat the market with quiet respect, knowing it owes them nothing. But humility doesn't mean weakness, it's strength and control. It's the bravery to stay out when the setup isn't right. It's the patience to hold firm through noise when your edge exists. It's the maturity to accept a loss without revenge. In the long game, restraint isn't passive, it's power. The market thrives on overactive traders. Those who can wait, hold, and stay still when others can't, they rise. The long game reveals a strange truth. The less you try to control, the more control you gain. When you micromanage every tick, the chart begins to control you. Your mood rises and falls with every candle's move. You become trapped in the noise, reacting instead of executing. But when you step back, trust your plan, and give the trade space, you take back control. Not over the market, but over yourself. And that's the only control that truly matters. What makes the long game tough is that the payoff isn't visible at first. In the short run, discipline feels dull. Patience seems thankless. And restraint feels like missed opportunity. The market tempts you with quick rewards, while the long game's gains stay hidden. But over months and years, the compounding slowly appears. Small victories start to add up. Consistent risk control protects your capital. Emotional balance shields you from destruction. Then one day, you look back and realize the long game was rewarding you all along. Here lies trading's greatest irony. Your real profit isn't money. It's in who you become through the process. Money comes and goes, accounts rise and fall. But the patience, the discipline, and the emotional strength you gain, those stay forever. Those are the traits that transform not just your trading, but your entire life. The market, in its harshness, shapes you, if you allow it. The real question isn't whether you can make short-term money. Anyone can get lucky once. The real question is, can you last long enough for your edge to pay off? Can you hold when others quit? Can you stay disciplined while others panic? Can you remain calm when others chase noise? If you can, the result becomes inevitable. Not because the market promises it, but because probability does. The long game never offers quick wins, but it always rewards persistence. So, as you end this journey, remember this. Holding trades isn't about charts, it's about who you are. It's not about predicting the future, it's about trusting the process. It's not about avoiding fear, it's about walking through it without surrender. The market will test you countless times. Emotion will try to tempt you even more. But if you can stay, if you can endure, if you can hold, the long game will reveal its reward, not today, not tomorrow, but in time.